Yo, what's up you guys? Welcome back to a new video, and in today's video we are going to take a look at the Nasdaq, the Dow Jones, as well as the dollar index, as well as Euro USD from a technical and a fundamental perspective. If you are new to the channel, a sub would be appreciated, as I provide valuable educational content from a daily basis. And if you enjoy the content and you feel like I've actually learned something here today, please do consider smashing that thumbs up button there as well. Now, we went from inflation, we went to interest rates, and now we're back to the most important news for some people. That is, I knew it was a buy. We got the NFP coming through on Friday. Now, if you look at what we got going on here, okay, in terms of high impact information, what we are going to do is we're going to filter that to the red news that we have here. Okay, now what we got over here is this week is one of those weeks where you are being said, okay, please stay out of the market. But we know it is difficult for you to stay out because you have a situation, you have a condition that doesn't allow you to stay out of the market. We got Powell testifying tomorrow. Right after that, we got the ADP. We got Powell come through again. Like, I need to testify again. I forgot what I wanted to say on Monday. They come through again on Wednesday. Then so on Wednesday we got the ADP, which is the automated data processing data that's being released. We got Powell that comes out and testifies again. We got the JOLTS job opening, which is also just a survey being conducted. And then on Thursday, rest, pause, in consolidation. And then on Friday, you got the NFP data coming through there again. Now I tell you, hey, you need to stay out of any dollar index pairs, or it's like, don't tell me what to do. I want to trade. And then you just go in and you go and do it again. There's nothing wrong with looking for setups in the market through high impact news there as well. Just be very careful when you step into the market. Now, one thing to keep in mind is something I want to speak about that happened on Friday. Now, I know, you know, and that 200 telegram channels that you follow, where the one says buy gold and the other one says sell, and then you go, guys, which one must I go? You and all of those people were probably sitting in here going, this is a buy, right? I told you it's a buy. Okay, it's a buy, guys. It's a buy, it's a buy, it's a buy. So you go on the 4-hour time frame. Now, the reason why we're going down this route is because I want to show you guys how manipulative the market can be. Firstly, retail trader comes in, and we are going to call this trader number one trader. We're going to call him Jason, right? Jason comes in and Jason says, guys, I can see a double top, right? We can say, yeah, I can see a double top, guys. And then he says, right, we've got a confirmation there. We got a red candle. Let's get into the market. The market says, yes, you are right. This green candle that you see here, move to the downside first. And then Jason goes, guys, I told you it was a sell, right? Now everyone's selling. And you're going like, finally I can quit my job because we are going down. We are eating, like they would say, like people always say, like, we're eating. And I'm not sure what you guys are eating if you're eating perps, because you're only eating when you withdraw the money and you actually buy something with the money that you withdrew. But you're not eating anything. You're still trading, okay? But the market moves down. It gives you a confirmation that we are ready to move to the downside. You get excited, take a screenshot, post it on Instagram. Your 99,000 followers sees it and they go, oh my god, this guy is killing the market. And then the market then does what's known as a give me back my money. The market breaks above resistance, comes back and tests it as support, wiping out you and all of your friends that you're not going to tell us about. But that is okay. That was a lesson that you never, ever, ever, ever get into the market at support or resistance without a proper confirmation. Now, I'm not here to speak. I'm not here to teach you a strategy or anything like that. What I am saying is that pay attention to everything that is going on in the market, and also pay attention to the obvious thing that could potentially happen. Now, if you think about this, right? The obvious thing that could happen here was for the market to reject resistance because it rejected support, right? I mean, it's obvious. And that is where people get wrong. People go like, yeah, just going into my trend line, breaking my all of that stuff. They look for every reason to accommodate what they are thinking, and to accommodate what they expect to happen there as well. Now, please, just whenever you get into the market at support or resistance, make sure that you at least get a proper confirmation from there as well. Now, let's move out of the way. Okay. This week we've got a lot of high impact news. Next week, I can't wait for next week. My favorite news is coming out, the CPI, which most of you go buy stop, sell stop. Then the market just give me buy stop and sell stop, and then you go, I lost everything. What must I do now? The market says deposit again, and then and then you just go through the same thing. But we got some very good news coming through this week. We've got the NFP again. I told you it was a buy. I told you it was a sell, but there's no confirmation of that, because nobody can predict high impact news unless you've got Powell's number on your phone and you said, Powell, please give me the NFP data before it gets released. Other than that, you're just guessing exactly what the data is going to look like. So don't never say that I knew it was going to buy. I told you it was going to be a buy. No. We are all guessing if you make that statement. But in any case, now with that out of the way, okay, based on where I'm sitting now, but I do expect some consolidation to take place. Most of you know that before high impact news are released, especially with everything that's going on here, you don't expect a consolidation, a ranging market before any break out of that as well. Now, if you look at the dollar index, what you'll realize over here is you'll notice that the index has been consolidating, broken above resistance, tested it as support, and then has been basically moving sideways for the last part of last week there as well. Now, this article from CNBC says stock futures are little changed as investors look ahead to comment on Powell's comments with the job data ahead this week. Now, they're referring to the NFP data, which is only due on Friday. That means, could we potentially see a sideways moving market for the rest of the week until Thursday? Now, that's not for me to decide. I can only do a breakdown, and that is exactly what I am going to do. Is we're going to look at some technical information only on the daily time frame. Now, the first thing we can obviously see over here, like I said, now the market had broken above resistance, came back to test it as support. Also, if you look left over here, you can see the market had also tested previous resistance there as well. As a rule of thumb, before high impact news, we normally expect the market to move sideways. I do expect the DXY to start this consolidation phase, and then potentially, depending on what the NFP data says, we could potentially be going either up, or we could potentially either see the market break below, retest, and then continue lower there as well, because that's basically how the market operates for us on this side as well. Now, we can obviously say the same for gold. Now, gold over here. But one thing I did see last week in particular, now so to you guys, right? Last week, gold was quite bullish, right? Gold was quite bullish, and the dollar was not moving as much, but we still saw some. So you can see here, gold was quite bullish last week, and the dollar was still moving sideways. I do expect gold to continue this clearance to the upside, potentially make that move to the upside. So I do expect the price of gold, I do expect gold to dip slightly lower. This is on a 4-hour time frame, and then potentially move higher and continue that move to the upside, because we can see the price action on gold is not as choppy as it is on the index. And we can see a gold broke above resistance, now back and tested it as support. We could potentially see the market go and test that wick over there, which is basically just a high that it was creating on a lower time frame and higher time frame as well. So next up we got the Nasdaq, right? So the Nasdaq also, I just need to look at the price now. So the Nasdaq, obviously similar price action over here. We can see the Nasdaq also very important structure that the Nasdaq had printed. This level over here acted as a level of resistance, broke above that, tested it as support, broke below support, tested it as a resistance, printed a W, broken above the W. We expect a pullback to the neckline and a potential continuation to the upside. Now, I have seen this set up there on the Telegram group for you guys. So basically, the best thing to do is wait for that pullback and then definitely ride the wave to the upside, and keep it to yourself, please. Don't take screenshots. And then, you see, I'll tell you guys what the issue is. I'll tell you what the problem is with taking screenshots of your profit rolls and that's running. The FCA clearly states, and I know nobody follows what the FCA says because nobody cares. But when you advertise something, right, especially that's finance related, you have to tell the person that historical profits doesn't dictate future profits as well. So what that means is that if I put up a poster to say that you'll make 16 or 20%, I've made 20%, and you ask me, would I also make 20%? My job is to tell you. I can tell you how much I've made last week, but I cannot tell you how much I've made this week. How much I'm going to make this week. And the mistake that a lot of people make is that, someone asked me on my email, asked me, how much did you make for the past, I think it was for the past 2 weeks. I said 10%, 1%, 16.1%. That was the past 3 weeks' data. You're probably sitting there going like, okay, so how much did I make? Because you don't know, because you don't treat this as a business. You treat this as a gambling site. So let me give you the reality. So someone asked me, do you think I'd be able to pass an FTMO challenge with your signals? I said, well, I can't tell you that. I can't say yes, can't say no. Because why? The thing is, I can tell you I made 10%, 1%, 16.2%. You need 10%, you need 8% to pass the FTMO phase 1, 5% to pass an FTMO phase 2. So realistically, the answer should have just been yes. I said, no, I can't promise you that you'll be able to make that. I can tell you how much I've made before, but that doesn't mean you're going to make that as well. So the expectations is way too high for that also. So you have to keep your expectations low regardless of where you go in life there as well. And on that note, I have stripped the signals from the website, so it won't be available up until May month as well. So I will be back with signals again in May. I just need to take a little break from signals because I'm testing something else that doesn't require me to sit and look at these charts for the rest of my life so much. But I will still be passing the funded accounts because that doesn't require me to sit here and look at the market like this the whole time. In any case, next up we do have the US 30 over here. The US 30 also printed this overextended W formation. What we have over here, this is an overextended W formation. After an overextended W formation, you expect to pull back to the left leg. Now, not to sound too fancy, okay, because that sounds too fancy to take. All you can say is the market had broken above this level of resistance. Once the resistance gets broken, it becomes support. The market printed an impulse. After an impulse, you expect a correction. And the best way to measure that correction is by taking your Fibonacci from the low to the high. And we could potentially see the Dow Jones continue slightly higher to go and test that previous level of support that got broken as the resistance, to come back and test this level as resistance that is now acting as support. Yeah, that was 100% correct. Like, okay. Next up we got Euro USD. Now Euro USD, if I look at the price action, right, with my eye, I can see that there's clearance to the upside, right? If you look at all of this imbalance, people's like, imbalance, need to fill in the imbalance. But then what about all of this here? So if you look at the price action, right, what you'll notice is you'll notice here's a very important level, right? Because we like to work with price action. Price action is beautiful. Now, what we have over here is we got a market that printed support, broke below support, came back to test it as a resistance, broken above resistance, came back, tested it as support. Now, if you remember what I said at the beginning of the call, we could potentially, not call, but video, we could potentially see the market start this consolidation phase over here as well. Now, this could potentially be the low or the support level, and that could potentially be the level of resistance that we could see the market start printing. So we could see this here take place, and then based off what the NFP data looks like. Now, last year, NFP data, if NFP data was positive, that would have normally negatively affected the dollar index, but it's quite weird to see that if the data is positive, it positively impacts the dollar. Now, why was it in that way? Because when positive job reports came out for the dollar index, it left investors skeptical to why inflation is on the rise, but people are still getting new jobs. Because remember, with inflation, and Powell said this last year in Feb, right? He said that as they need to hike interest rates, right? A lot of people are going to lose their jobs. If you're saying, how does that work? It's quite simple. Companies makes money through consumer spending. Okay, companies such as any company, Pick and Pay, ShopRite, Walmart, for those in the US, any shop you go to, they make money through me and you and what we spend. If we are exceeded with debt, and debt is attached to a home loan or a car or a loan in general, that debt is attached to interest rate. So if our debt increases, we're less likely to spend money. Now, when a company doesn't make any money, who needs to go? The guy at the top? No, not that guy. They'll start chopping off at the bottom. So how's people getting jobs if consumers is supposed to lose their jobs and companies is not supposed to make any money? And it's a confusing roller coaster for, like, you don't know which way it's confusing. Recession definitely coming, but I'm not sure if they are lying about the information or what the case is. But let's see what the job report holds on Friday. And that is all from my side. Thank you for your time, and as always, cheers for years.